So good morning everyone, and welcome to another training session for Danuvie CryptoBot. My name is Daniel Ovetesui. I'm the chief programmer at Danuvie CryptoBot. And in today's lesson, we're going to be looking at three topics. So the first topic is understanding leverage and trade size. So in today's lesson, we're going to be looking at what leverage is and what is trade size. Then I'm going to be going to my Binance account so that I can show you what leverage is on Binance. If you are using any other exchange, KuCoin, OKX, Bitget, this language is similar to all cryptocurrency exchanges. We are going to be looking at them in detail and what it means for your invested capital and the implications on your trading. So we're going to be looking at it in full today. So that's the first topic, understanding leverage and trade size. And the second topic for today is stop loss and trailing stop. So in today's lesson, we're going to be placing trades on the chart. We're going to be placing trades and we're going to be setting our stop loss. So you are going to see how the stop loss is going to be set, how the take profit is going to be set in this lesson. We're going to look at it and we're going to look at the benefits of using a stop loss or a trailing stop in this lesson. And then the third topic for today is going to be a very, very unique candlestick, or rather a unique candlestick pattern. We're going to be looking at a very unique candlestick pattern that tells us when the price has started moving. Remember we said our bot uses SMC signals, which is smart money concepts. And the goal of smart money concepts is to help individual or retail traders to trade with the big players and the big institutions. So in doing this, there is a specific kind of candlestick pattern we're going to be looking at. And this candlestick pattern is going to tell us when the price has started moving in a direction, whether it is going up, whether it is coming down. So, and the name of that candlestick pattern is called 3 white soldiers. So 3 white soldiers when the price is going up, and then when the price is coming down, it's going to be 3 black arrows. So this is a very, very, very popular candlestick pattern we're going to be looking at. And we're going to be going to the chart today, and we're going to show you how it looks like on the chart, so that when you see it after your confirmed change in direction signal or your strong confirmed change in direction signal comes out, you should be looking for this candlestick pattern that gives you the assurance that, okay, this is the right time to enter your trade. So the third topic is 3 white soldiers and then 3 black arrows. Okay, so let's go right into the video. So the first topic is going to be understanding leverage and trade size. Let's look for that. Hold on. Okay. So this is understanding leverage and trade size. So in trading, leverage and trade size determine how much exposure you have in the market and how much risk you take. So this is very, very, very straightforward. It's just letting us know that the amount of risk we are going to be placing on our capital. Since we are putting our capital into the market, we want to know at what percentage of the money in my account balance am I going to be using on a trade. That's what is called leverage and trade size. So now let's look at the definition of leverage. What is leverage? Now, leverage allows you to control a larger position with a smaller amount of capital. I think that is straightforward. So I don't need to go deep into it. So for example, with 10x leverage, you can control a $1,000 trade with just $100 of your own money. So what this simply means is, if you are using a crypto exchange like Binance, Bybit, OKX, Bitget, and you have a $100 account, since you have requested for a 10x leverage, what the exchange is going to do, the exchange is going to borrow you some money, okay, so you can take on a larger amount of trade. So if you are requesting for 10x, the broker or the exchange is going to match your order with $100 times 10. So which means you're going to be trading with $1,000. And if you look at the continuation, it says, however, leverage works both ways. So if the trade goes in your favor, your profits are multiplied, like I said. So you are trading larger amounts, and if your profits are multiplied, you're going to be getting larger profits. And if it goes against you, your losses are also multiplied just as fast. So like I said earlier, it goes both ways. If you are using a higher leverage, which means you are placing a higher risk on your account. So if the price moves against you more than it moves for you, you are going to lose your money faster with a higher leverage than you are going to lose your money with a lower leverage. So it's always important to know what kind of leverage am I using when trading. It's always very important. So that's the way leverage is often called a double-edged sword. It can help you grow faster, but it can also wipe you out if you don't manage risk properly. We've said that before. So it's always important to know, okay, what type of leverage can I use for my account balance so that I don't get wiped out quickly. So we're also going to look at some calculations on how to calculate your leverage and help you place minimal risk on your capital. So let's go to the next one. We are looking at trade size. So what is trade size? Trade size refers to how much you decide to buy or sell in a trade. So even with leverage available, it's wise to keep your trade size small. You can see that. So now, usually 1 to 3% of your account balance per trade. That's trade size. So trade size in this sense now is, you have a $100 account and you only want to risk $10 per trade. That's trade sizing. You are losing a very small percentage of your account, and the $100 of a $10 out of $100 is 10%. If you are using $5 out of your $100, that is 5% of the account on one trade. So which means a $100 account can run up to 3-4 trades at the same time if you use this trade size. So trade size is in the sense, not trying to put too much strength or too much pressure on your account. That's what trade size is. So your trade size is just like your margin. Yeah, your trade margin. I think that's the better word to use to call it, your trade margin. So out of $100, your trade margin on Ethereum, your trade margin on Solana, your trade margin on XRP is $10. So if you are trading Bitcoin, Ethereum, Solana, XRP, you can decide to use $10 for each coin pair, which means your overall risk from your $100 is going to be just $40. And that $40, you have spread it out across 4 different currency pairs. So that's basically what it is in trading. So this ensures that one losing trade won't significantly hurt your account. So you see that. That's why it's very important to know what trade size is and leverage. So pro tip, leverage doesn't make you a better trader. Discipline and strategy do. So it is one thing to understand leverage, and it's another thing to understand your strategy you're using. The leverage only helps you minimize your risk so that you're not risking too much. Okay? And trade size just keeps your trading size small. So you understand? So even if you get caught up in manipulation, if you are using a very small trade size, you're going to take a very small loss. That's what trade size is. And if the trade actually works out for you, you might need to score a lot of points to make at least a reasonable amount of money. At least if you are using a $10 account and you are using a leverage size of 10x, okay, I think after this we're going to go into that calculation so you can now see how much you're going to be making if you're going to use a $10 account to trade with a specific trade size. Okay, so let's just finish this up. Leverage doesn't make you a better trader. Discipline and strategy do. Use leverage wisely and size your trades based on your risk tolerance, not greed. Okay, so I think this comes to the end of this lesson. But before we end this lesson, I want to go to Meta AI. I want Meta AI to calculate leverage for us and trade size, and it's going to tell us how much we are likely going to make using trade size and leveraging. So let's go to Meta AI now. Let's ask Meta AI so that you can have an understanding of what leverage and trade size really means. Okay, so I'm going to type, make this very fast. How much I will make with, let's say for this instance, okay, let's say 10x leverage and I score a 3% move in price. Okay, so the question we're going to ask Meta AI is, calculate with a $100 account, how much will I make with 10x leverage and I score a 3% move, which means price moves in my favor, 3% in price. So let's see what Meta AI is going to respond. Okay, so this is what Meta AI is saying. To calculate the profit, let's break it down step by step. Initial account balance is $100, leverage is 10x, effective trading amount is 100 times 10. Like I said earlier, leverage is simply the money that your broker or your crypto exchange is going to lend you so that you can take a bigger trade. So as you can see, it has calculated for, which is $1,000. Now, price movement is 3% of $1,000, which is equals to $30. Now, if the trade is successful, your profit would be $30. Your new account balance would be $100 initial balance plus your profit, which is equals to $130. So with 10x leverage, a 3% move in price would result in a 30% gain in your initial $100 account. I hope this is explanatory. So this is for leverage. Now, so you understand, this is for leverage. Now, let's just look at trade size now. So, if I say, okay, since I'm using 10x leverage, okay, I'm using 10x leverage now on $100 account, I can say, okay, instead of $100 now, I want to reduce my size now. What this simply means is that I'm investing $100 into one coin pair. That's what it just means. But now I'm going to ask it now and say, okay, I want to use just $10 now to invest into a coin pair. And let's see what happens. So now let's ask it another question. What about a $10 account? Let's see what it says. Okay, so let's calculate the profits. Initial balance is $10. Leverage is 10x. effective trading amount is 10 times 10, which is 100. So Binance is going to borrow you $100 to trade with. Now, price movement is 3%, and 3% of $100 is going to be $3. So if the trade is successful, your profit would be $3. Your new balance would be $10 initial balance plus $3 profit, which is $13. So with 10x leverage, a 3% move in price would result in a 30% gain on your initial account. So I believe this is self-explanatory. So like I said, you can either invest your whole money into the coin, or you can decide to break it down into different segments, like $10 for Bitcoin, $10 for Ethereum, $10 for Solana, $10 for XRP, depending on how you want to do it. But let's look at okay, I think we'll come to that when we are looking at stop loss. I wanted to calculate your stop loss, where it's going to take you out of the trade if it doesn't work out. But I will leave that for the second topic, which we are going into now. It's going to be the stop loss and trailing stop. So I believe this is self-explanatory, and this brings us to the end of the first topic for today. And we're going straight into the second topic for today. Before we do that, let's just go to Binance. Let's go to Binance account and let's see what leverage actually looks like. Let's go and see what it looks like. For those of you who are using Bybit, Bitget, it will apply. The same thing applies. So let's just see what leverage looks like. Okay, so this is my Binance account. This is my Binance account, and if you look up at this level, you will see something they will call 20x. Now that 20x is where you set your leverage. Okay, so if I'm going to change that, if I want to change that, I'll just come press it and I shift it down to 10x and I press confirm below. But I'm not going to do that because I don't want to change my leverage. So trade size now, when you want to place a trade now it's saying this is the Trump USD coin pair. Now it's saying you want to enter a trade now. So out of $43 now that is here, I want to use $10 of it. So what I'll do is I'll request 200, and as you can see, since I'm using 20x, but if I take this down to 10x and I want to use $10, I'll just say 100. And as you can see, if you look at this portion below, let me just highlight it for you. Look at this place. You see that? Look at this place. You can see it says the cost right here. Cost. So that's the cost you are going to pay on your account balance for this amount of trade size. So which means you are going to be, this is now your margin. So the margin is what is going to be used for this coin pair. So I believe this is straightforward. So I think this is the end of the first topic for today. Let's see, we can go to the second topic and round up. Okay, so let's go to the second topic for today. Second topic for today is stop loss and trailing stop. Okay, so stop loss and trailing stop. Okay, so it says here, mastering the trailing stop, protect profits smartly. So one of the most effective ways to manage your trades is by using a trailing stop, a dynamic stop loss that moves with the price as the market goes in your favor. Now, a trailing stop is a dynamic stop loss. Everybody, if you are a forex trader, everybody knows what a stop loss is. A stop loss is like a protective measure on your account in case there is unforeseen manipulation. That's the purpose of a stop loss. So a stop loss is meant to take you out when you enter the market and you do not predict, or you don't anticipate unforeseen manipulation. That's what a stop loss is meant to do. Now let's see what the definition of a trailing stop is. What is a trailing stop? A trailing stop automatically follows the market in your direction, or rather, let me say, follows the price in your direction instead of staying fixed. A stop loss is fixed. If you watch my last training video, I talked about stop loss, but in this video I'm going deep into it so you can really understand what stop loss and trailing stops are all about. So it follows the price in your direction instead of staying fixed. It trails behind price by a set percentage, helping you lock in profits while reducing your risk. So now we give an example here. It says you buy Bitcoin at $60,000, and you set a 1% trailing stop. Now, if Bitcoin moves up to 6,600, your stop loss automatically moves up to 60,000, 1% below highest price. So if you enter and you make an entry on Bitcoin at $60,000 and you set a stop loss or a trailing stop of 1%, your trailing stop is going to start at 59,600, or rather 59,400, because since it is 1% of 60,000, 1% of 60,000 is $600. So you just do 60,000 minus 600, that's going to give you $59,400. So your trailing stop is going to be at $59,400. And when the price automatically moves up to, let's say, 60,600, then your trailing stop will automatically move up by 1% to 60,000. That's just how it works. It's a dynamic, it adjusts itself. It's a dynamic stop loss. It adjusts itself as the price progresses in your direction. So if BTC keeps climbing, your stop continues to follow. But if BTC reverses by 1%, the position closes